We are having great results on the stock market using together fundamental analysis and technical analysis. In this video I will show you exactly how to use these two approaches in order to make profit with the stocks. Stay until the end of the video because we will see a stock we are buying right now.
So first of all, we have to search for investing opportunities. We have to search for company with high value in the fundamentals, with a situation on the stock market where the stock is undervalued. How can we do it? Very simple. We can go to the ranking page, ranking section in Forecaster Terminal, where we can find all the indexes all across the globe. If we go, for example, on the S&P 500, here we can find if the whole index is over or undervaluated. This is possible. In this case, for example, the S&P 500 is undervaluated by 2.70%. How is this possible? Very simple. We know all the components of the index, so we know all the companies inside the S&P 500, and for every company, as you can see here, we have the fair value. If you open, for example, the Microsoft Corporation page, as you can see here, we have the average fair value, which is the results of three different type of calculation. So we have the discounted cash flow, the Peter Lynch method, and the economic value added method. And as you can see, the average fair value is $470, which means at the moment, right now, exactly right now, the company is 14% undervalued, because we compare the fair value with the actual price on the stock market, and we can find if the company is over or undervaluated. We do the same calculation for every S&P 500 components, but of course we do it for all the indexes all around the globe, and we find if the entire index is over or undervaluated. Okay, perfect. If we go here, we have this very nice button, which is the best to worst button. And if we click it, the system gives us a list with all the company starting from the best to the worst, as the button say. And at the beginning of the list, we can find which are the best opportunity on the S&P 500 in this case, but as I told you, we can do it for all the indexes all across the globe. And these are not only the most undervalued company, but these are the most interesting opportunities, fundamentally speaking, because we create this list thanks to all these parameters, fundamental parameters that we measure thanks to the forecaster. Okay, if we go, for example, on the Microsoft page, of course we have this first section where we calculate the fair value, but scrolling down the page, we can also find the solidity part, where we have the Altman Z score, the Piotrowski score, and the Benisham score. All these ratio help us understand if the company is solid. Okay, so for example, if we go to Altman Z score, we can find a very interesting score that tell us if the company has a risk of bankruptcy. Okay, so in this case, talking about Microsoft, we have a company with an Altman Z score of 9, which is far above 2.99, and it means Microsoft is in a safe zone, so it's not gonna bankruptcy this company. Okay, very interesting. we talked before about the Benisham score. Okay, so in this case, we can find that Microsoft is not rigging its financial results. And we also have Piotrowski score, which is a very nice ratio that tell us if the company is strong or weak. And in the case of Microsoft, we can definitely say that the company is strong. Okay. So if we scroll down again the page, we can find the value generation, where we can find, for example, if the company is doing buyback or not. In this case, as you can see, in the case of Microsoft, we can find a company which is regularly doing buybacks since the 2018. And this is something really good for us investors, because the decreasing number of outstanding shares, it's something good for our shares, because the value of the outstanding shares is increasing if someone else is buying and burn, let's say, all the other shares that are outstanding. Okay, so what the best towards a button do is something very easy. It creates a list with an average of all these parameters, the fundamental page parameters, and give us a list with the best opportunities. Okay, so I would like to talk about a company today which I found thanks to the ranking page, but on the Italian market. And we already talked about this company. We can go, for example, here. This is the Italian index. We do the best towards a selection. And here at the number 5 position, we can find STM Microelectronics. Okay. This company is also listed in the United States. As you can see, this company is quite big and it's listed at the NYSE. So this is why I would like to analyze it, because it's in a very interesting situation, and I really think it's time to buy this company now. Just to be clear, I already bought it. Okay, so I have this position. So I would like to um, share it with you, because I really think it's a good moment for buying this company. Okay, this is the company. So what we are doing now is something very easy. We will take a look to the company fundamentals, and if it's interesting as an investment for a long term, we will switch to the technical part, to the statistical part, to the chart, and we will try to understand if it's time to buy or not. Spoiler, yes, but I would like to tell you how I do this kind of approach, how I merge fundamental analysis and, let's say, technical, in order to have great results. So first of all, let's have a look to the fundamental page, where we can find a company which, fundamentally speaking, is really undervalued. Because look, we have an average fair value of $76, and the current price on the stock market is 26. So we are talking about a company which is really undervalued. Okay. Mr. Babesh found the email in the spam. Perfect. Thank you very much. Anyway, so the company is undervalued, and if we use also the discounted cash flow and the Peter Lynch method, which are now turned off because the results of the calculation is very different from the actual price. Okay, we really found a company which is really undervalued. And this is something really important because, as you can see, the financial are doing really well, starting from 2016 until the 2023, which is the last balance sheet we have. Okay, we can find a growing company. Why the prices on the stock market drop? This is the reason. In the last quarter, we had a slowing in both sales and net income. Okay, and this is something really important because if you would like to check which is the, let's say, actual situation regarding sales and net income, you can also go here on the overview page and you can plot the results here on the chart. And for example, if we go on this chart, we can find a very interesting solution because every time, at the moment, of course, the situation, the sales and net income, as you can see, are dropping. Look, this is a very interesting data because this one, it's not the 2023 data, but this is the trailing 12-month data. It means that this number is created by the sum of the last 4 quarters. Okay, very simple. We go to the quarter results here in the fundamental here, and we add this one, this one, this one, and this one. Okay, this is a very nice method in order to have an updated situation regarding net income and sales. Okay, because if we sum these the last 4 quarters, we have an updated situation. And as you can see, watching at this chart, we can definitely say that prices of the share follow the fundamentals. And in this case, as you can see, we find the situation very interesting where the prices are below the net income line. Okay, and this is something interesting because we are talking about a company which is definitely doing worse than the previous year, but we can also say that in the long term the company is growing. Okay, so we can deep dive better in the analysis of the company, and as you can see, we have to understand if the company has a risk of bankruptcy. And in this case, we do not have a risk of bankruptcy because look, this company has a 4.37 Alt1 Z-score. So we do not have a risk of bankruptcy at the moment. And they are not rigging financial results because we have a Banisham score, which is 2.69, okay? Minus 2.69. So for sure, at the moment, the company is not performing very well, and this is why the share price dropped on the stock market. But at the same time, we do not have signals of a bad business. Okay, this company is active in the technological sector in the semiconductor industry. Okay, so this is why I'm interested in this company. This is the, let's say, ASML. It's the Taiwan semiconductor company, but for Europe, for Italy especially. Okay, and this is something very interesting because probably they are having a moment with bad results, but it's something that in my opinion, will be better very soon, okay? Because it's a good company and because the semiconductor industry is an industry that probably will have a great success in the future thanks to artificial intelligence and all these kind of things, okay? So it's a very interesting company, fundamentally speaking. What we have to do is to understand, studying the chart, if it's time to buy or not. Spoiler, yes, but I would like to tell you how to do it, okay? If we go to the overbought and oversold section, here we can find something really interesting because look, on this chart, we have three different indicators. One, it's here, advanced DPO. It's directly on the chart. Very simple. This is an indicator that take away the DPO. What is it? It's the trend price oscillator. Okay, you can find a lot of material. The trend price oscillator. You can find lot of material regarding the trend price oscillator, and it's a very simple indicator because it gives you the price of a stock, of an index, of something without the trend. Okay, so as you can see here in the menu, if you extract the trend from a chart, you can find easily a chart which is moving sideways, okay? In this case, what we do, as you can find here on the description, we apply Bollinger Bands, 200 period Bollinger Bands, and when the prices goes to the lowest part of the Bollinger Bands, we have a oversold situation. So we can definitely find, we can definitely say that statistically speaking, prices are low. Exact at the opposite, you can find the opposite situation when the price is in the upper part of the Bollinger Band. We can definitely say that statistically speaking, the prices are overbought. Okay, what we do is not drawing the Bollinger Bands, but we color the chart with this kind of color. So for example, here you can find that starting from July, the prices of the STM microelectronics dropped. Okay, and they were so low that the prices became green. Okay, so here, starting from July, we knew that this company started to be, statistically speaking, very interesting because the prices were low enough to be colored in green. Okay, so what happened next? Exactly on the same low, we started to see an increment in volume. We had a volume spike. And this is something very interesting because if we merge these two information, statistically low price and increase in volume, we can definitely say that someone is buying the company, someone is buying the shares. Okay. What happened next is something really interesting because we had a rebound in prices and then again, boom, a new low. Okay, with look, another spike in volume, and then we are today where the prices did exactly the same, a new low with a new spike in volume. And this is what tell me that it's time to buy. Okay, because we have low prices, free for the third time, at a third spike in volume, and then we can also see this one. Look, it's very interesting because we can move to the indicator section where we can find something really interesting. Because look, starting from the low in August, we can see the prices went down. We have a bearish trend here, but at the same time, the Wyckoff indicator started to rise. What the Wyckoff indicators tell us is something very simple. The number of buyers are increasing. Okay? So the number of buyers are more than the sellers. And this is something really interesting because, as you can see, we have a situation of divergency. We call it divergency. When stock prices go like this and indicators goes like this, we have a divergency. Okay? And this is a very interesting indicator, guys, because it tells us if the chart is growing, if the Wyckoff indicator is growing, it means that the number of buyers are increasing compared to sellers. Okay? And so we starting to have a lot of information because we have a statistical information that the prices are low. We have spike in volumes on lows. We had 3 lows and one is right now. So this is why I'm telling you, in my opinion, it's a stock to buy and I already bought it. Okay. And we also have this indicator that tell us that even if the prices are going lower, the number of buyers are increasing compared to the sellers. We have one last check to do, which is the speed indicator. And what the speed do is something really easy. We calculate the speed of the price as if it was a car. Very simple. We calculate the speed of prices as you can calculate the speed of a car. Very simple. In this case, look what happened. The prices drop and we also had a drop on the indicators. But when later, when the prices start to add a bearish trend, look what happened to the speed of the prices. They started to decline. The speed of this movement started to decline and the indicator turned back to the zero line. Okay? What you can see in this situation is exactly what you saw on the Wyckoff, a divergency. So we have prices, declining prices, but an increasing indicator. And this is why, okay, and if we combine, okay, if we combine all these situations, and I'm talking about the technical situation, the statistical situation, the speed of prices, the buyers and sellers, the fundamental analysis, we can definitely say that STM is now a very interesting buy opportunity. We already talked about Adobe in the previous webinars, but it's here in the first place here in the best to worst for the S&P 500. But if we go to the overbought and oversold, what we can see is that probably this stock will go back to this lower point because look, at the moment, we do not have spikes in volumes, okay? At the moment, we do not have a divergence between prices and our indicators. So we had the opportunity, we had a nice opportunity, and we bought it a few months ago. Here, look, we started to see green on the chart, green for the second time, spikes in volume, and then look, third low here. And look what happened here. Starting from this low, our indicator started to rise, but in the same period, prices went down and made a lower low. Okay, this was a major buy point. Okay, and then look what happened. Prices skyrocket. They went here, the chart colored in red, and look here. They went up, they made a new high, but at the same time, we had a divergence. So at the moment, Adobe, it's very interesting. It's a very interesting investing opportunity, but probably the price of the share will drop again, and we will try to understand what to do once they reach the previous low, because at the moment we do we we, we cannot see, we don't see buyers. We don't see buyers. We see buyers here in the STM microelectronic. Look, let's go here at the NYSE. Okay, here we find a very nice situation, because look, buyers are increasing, and this is probably a very important low where we can find, let's say, a boiling situation. Okay, next week we will talk about another section of the forecaster, which is the break-even. This is a very nice section, because this is a very nice tool, because what we experienced in the last years is that um, often a company start to perform really well on the stock market from the point where the company has its first quarter in profit. And so this tool, this page, give us something very easy. This page tell us all the companies that for the first time, let's open, for example, the first one, tell us all the companies that for the first time had a quarter in profit, as you can see. So next week at the webinar, we will deep dive in this section, and we will we will analyze all these new company that thanks to the latest quarter had a profit, and we will understand if there is something interesting to buy right now. Okay, so please subscribe to the next webinar, and we will do it together. Last but not least, if you can please go to Google, write Forecaster.biz, and if can you please write a review for us. It's very important for us, because Google will understand we are creating a good software. So if you have 1 minute in your life, please go to Google, write Forecaster.biz, and write us a review. Thank you very much in advance. Of course, the review should be 5-star. Thank you. And you can do it here in Google review, or you can scroll down the page and you can go also in Trustpilot. So for example, you can also go here. I send you the link, guys. And of course, if you're watching the recorded version of this webinar, you will find the link in the description. Okay? You will find the link for the next webinar here on the Forecaster terminal page, but I can also give it to you right now. Here we are. I'm sending it to the chat. And of course, if you're watching the recorded version of the video, you will find it in the description. So if you have 1 minute, thank you very much for writing a review to us, and see you next week. If you need something from us, just write in the website chat, or you can write to the email you can find at the bottom of the website. Okay? Thank you very much, guys. Bye bye.